Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar over the last two challenging up days have struggled to sustain. First of all, rejecting the level late on Thursday at 78.45.50 and from there has progressed further to the downside and now just breaking beneath the 60-day moving average. It is assessed from the technical bias that the RSI is under the midway point along with the MACD underneath the zero axis should implicate further negative sentiment and therefore could actually set up once we get a close under 77.15 towards a target around 75.80.85. I feel from the technical bias and also from the broader aspect that we are heading further to a bearish case and therefore should keep the scenario towards our objective, as I mentioned, of 75.80.85. The dollar index, which measures the greenback strength against a basket of six major currencies, and the euro weighted at 57.6, as you can see here, is that the euro has dropped further away from that 120 level and the dollar index has claimed its highs around 92. It is assessed that from the technicals, we should still keep an eye because they're not overly weak. So I do anticipate 118 between 15 and 45 to be reached, which isn't really much of a downside target. Let's reassess from there, because if we do break beneath 118, 15.45, that does expose the region of 116. Since the beginning of this year, around 102, the dollar yen has surged to a high around 109.50, and then from there it's been showing bearish divergence, which has slowly kicked in as the RSI has dropped quite considerably, and the MACD is now married up to the RSI as it slips beneath the zero axis. It is assessed that this pattern may further slide and therefore look towards the region somewhere around 107.70 and reassess from there. The sterling is now pressuring this level once again at 138.15. We do need a decisive break, although the technicals are negative, to see the move down to 135.60.80, which I am in view of due to the way this pattern is set up, especially from the broader picture, as it is also negative. So let's see if the weeklies can increase from the dailies. After posting a couple of dojis and a hanging man, the market is somewhat showing and also nearly close to a shooting star. The market is breaking down for sterling yen and therefore looks towards a region somewhere around the highs of 147. With the close underneath the 151 region has also implicated further downside move, but I would like to see sterling cut through that 138.15 to get that move to its objective at 147. But with the technicals also helping this view, has come into negative sentiment, that is, since we've broken through the midway point and the MACD is also weaker. The faith in gold is still holding there at the moment to the bullish case. And the reason behind that is that the rejection of 1,756 didn't close underneath 1,716.18. Keep an eye on these technicals. Although the MACD is bullish, the RSI is questioning whether we can actually see this move to the upside. I'm still keeping that view as long as we maintain above 16.18, although it's somewhat away due to the fact is that we're trading at 17.40. But I believe the market from this pattern can actually kick up with the MACD and reach its objective somewhere around 1,760.65 and reassess from there as we may get a bearish rejection. After plummeting close to 9-10% late Thursday, the market has retraced somewhat of its losses. However, now showing a bit of somewhat struggle in continuing. Therefore, we could see a return back towards this level of 58. Although my view is neutral, under 58 does expose a region of $55 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday pool. I hope you enjoy the great start to the day and to the new week.